All right, guys, welcome back to the Independent Investor Channel. My name is Ryan. We're going to be jumping into the Roth IRA #1 and doing a portfolio review. This ought to be one of the final reviews I do for 2019 as we roll into the holiday season. Really hope you guys enjoy the transparency on the channel. We do this to show investors what's possible. And as a self-directed investor over the last 5 years, I've been able to triple my account. And I've been able to triple my account times 2. Okay, I roll out 2 portfolio reviews that are both designated as self-directed Roth IRA accounts. Those allow any dollars that are invested in there to grow unobstructed over time without the effect of fees over those dollars. And I'm just one of very few testimonials that come onto YouTube and declare these results as openly as I do. I don't have to do this. I don't. All right? And I do it for you. I do it for the subscriber who sits across and not just gets an entertainment piece from just seeing a bunch of a basket of stocks in a portfolio. Anybody can do that, as indicated by the current landscape on YouTube. There's portfolio reviews are a dime a dozen. How is it built? Can you take the information that's being declared and deploy it for yourself? Can you achieve the results that some of these other people are achieving? Can you achieve it on a blue-collar salary? I think a lot of these questions are one that we take on, we challenge, and we look to push out some value to individual investors looking to get involved in the stock market, but don't have a lot to get started and they just want to know how. We provide that validation through a testimonial on the channel. I'm going to drop you into the self-directed account IRA #1, and you can actually see what's possible. Please enjoy. All right, so we're within the self-directed Roth IRA #1. This is the flagship account that I have. I thought it would be cool to do a review before the year's end. I'm going to do a comprehensive year-end review on the entire portfolio, but this is just Roth IRA #1. There's been some changes in this. I've got this kind of set the way that I want it for the long term. There's been a lot of generating profits over the last few years. A lot of profits that have been generated have been turned back into new positions in the portfolio, so I'm satisfied with the companies that are in here. Obviously, you can't invest in them all, but these are the ones that I've really wanted exposure to if I were to, build a perfect portfolio for myself. This is the way I would envision it. And to get exposure to these names really means a lot to me, and this will be of interest to you guys and how I end up seeking exposure to the market. So sit back, enjoy. I'm going to go through these quickly. Really, it's just a full disclosure on the portfolio, so don't expect a whole deep dive on any of these names. But starting at the top of the list, we've got Apple Computers, which is the top performer. I may run you guys through my portfolio brief, which is a function in 𝑪𝑎𝑛𝓋𝑎 that allows me to have a condensed 2-minute brief on certain highlights of the portfolio, which is kind of cool. It's just one of many services on the full service platform that they offer, so kind of cool there. And then the new position in Amazon, you can see here, has been started. It's actually the largest single holding in the portfolio, just ahead of Walt Disney. But we needed to increase the discretionary exposure. There was no better name, in my opinion, in the space than Amazon. So hopefully we can, this is kind of the icing on the cake in this portfolio with regard to being long on this name. I think the only way to invest in Amazon is to just invest in it and let it do what it's going to do. So we'll continue to monitor that and have fun owning that. No better company with regard to online retailing and cloud services. So Boeing is one that's making its way back. It's had a rough year this year. but still one of the top industrial companies. This portfolio is fairly heavily weighted toward industrials and technology. If you put these two Roth IRAs together, you guys know I build these co-joining, and I build them to reflect each other's strengths and weaknesses, so I don't have any overlap in the accounts, but each one individually does have its own small emphasis. This one I tend to be a little bit more aggressive with, and I build this in respect to my existing TSP that I have, so it allows me to be a little bit more aggressive with this, which sometimes pays off and other times it doesn't, but that's just one of the strategic goals of this account. So Boeing there in the industrials represents a pretty good allocation across the industrial sector in this portfolio, and the other one, quite frankly. Bank of America, nice strong 50 share position in B of A, and right below it Citigroup has been a nice performer this year, lagged the beginning of the year and kind of caught fire toward the end. I've owned this name all year, and will continue to own it going forward. I consider it to be a top 5 financial bank, so we're good there. Caterpillar, one of those companies that I didn't own before 2019, and this is, all of these really represent a starting position, that of which can be built upon over time. So satisfied to finally have Caterpillar in the portfolio. I can't believe it took this long, but there it is. Nonetheless, we're working with Caterpillar now. CRM Salesforce, one of the two growth names with Amazon and CRM that really fit the bill for me as far as the risk profile of the stock itself, but representing industries that I want to be part of. And a CRM with the customer relations management software, they are the best in the business. What they do for companies is amazing, providing the in-depth data and analytics to head executives of all the major companies in the world. They are the premier player in the space, and I don't see that changing anytime soon. So CRM Salesforce is there in the portfolio. CVS Health, we took some profit there in that name. You'll be interested to know. That's fine. Kind of reduced some of the healthcare sector, but I didn't want to reduce the position altogether. So we're keeping a small starting position there. Walt Disney has been a nice performer this year. I've owned this a multi-year holding for me. Satisfied with that, and prospects are high for 2020. It's come back a little bit, I think, which is fine. Walt Disney is not a company that I mess around with. My eyes typically glean right over the top of it. It's doing what it needs to do. It took multiple years to build up in this position, adding little bits here and there, and this is where it's settled out at 32 and change. So we're good with our position in Walt Disney, certainly a cornerstone in this portfolio. And as we march down, FedEx in the industrials sector, probably, I looked at UPS at the time, and UPS would have been the way to go here for sure. But Federal Express, nonetheless, has been kind of an underperformer this year. That's fine. I didn't really start it with a whole lot. Represents a fairly interesting starting entry position in FedEx. We'll own it long. That's totally fine. Right below it, IBM and Intel, a couple of established chip maker and services business, iCloud with IBM, and really been kind of disappointed in the performance here. That's fine. We'll sit on the dividend and continue to allow that position to work. Johnson & Johnson in the healthcare, that has been a nice performer this year. Probably looking to break out on this name. If I could add to any name, it would probably be J&J. But satisfied there. Entered into Kimberly-Clark for the first time in 2019. This is a name that I've watched for a long, long time. Really the big three, Procter, Kimberly-Clark, and Colgate-Palmolive. I would throw Gillette in there as well. Worth looking at in the space as far as I'm concerned. But Kimberly-Clark fit nicely in this. At the time I purchased Kimberly-Clark, needed to boost up on the staples exposure and did that. Right below it, Coca-Cola. We've owned this all year. Just been kind of a steady warrior. I believe I took pretty good profits at some point this year. I do believe I traded this. I'd have to check the trading activity within the account, but I'm pretty certain this jumped up pretty high and thought it was a good time to skim some profit off the top, and that's what I did. But this position is settled out at 51 shares, so we'll continue to allow that to grow. Lockheed Martin, again, a starting position here. We've taken profits multiple times in Lockheed. I know defense really came into favor for a few months this year, and I was looking to take advantage of that short-term trend in defense. Didn't think that it was going to last forever, but all the defense names were on fire. So it did take some opportunity there, but we'll continue to hold true on Lockheed Martin. McDonald's, I've owned for most of this year in different stages. We've settled this position out at about 20 shares, nothing too crazy. It is relatively one of the larger positions in this portfolio, which is fine. We've got that dividend reinvestment working for us, and like I said, when I put this portfolio on moratorium, that'll be allowed to just work and do its thing. I've got the position settled in the manner that I want. I've got it. You'll notice the way I portfolio build, I don't overexpose to any one name. I typically try to put in the portfolio a position that I feel is appropriate in relative size to the overall portfolio. What I mean by that is I don't have, all of my money jammed into the top 4 holdings. I don't own the majority of my money in Amazon. Even though it's the biggest position in the portfolio, I still try to enter a position that makes sense for the portfolio, so I'm not overly weighted in any one name. Now, there's no perfect way of doing that, but at least that's somewhat of a strategic goal in what I was trying to do when I was building this out. And then you got Medtronic right before it. It's just been a nice money maker for me this year and last. That'll continue to remain there. Microsoft, as you guys are getting the hint in this portfolio, is fairly heavily weighted toward technology, which is fine. This portfolio serves a lot of strategic purpose for me in that I can be a little bit more aggressive in it, owning the S&P 500 in my a TSP. So that's kind of the justification that I make when I'm looking to make this a little bit more heavily weighted around single stock exposure. And this portfolio works really, really well for me for that. So Nike, this is definitely a starting position here, 10 shares. So we're happy there. Northrop Grumman, we're happy here with an entry-level position. Procter & Gamble has been an outperformer this year. It's been nice to see that. Philip Morris is the new position there. That was just a screaming buy. That really was the one bright spot when I was combing through looking for value. Unfortunately, I really didn't need a whole lot of staples when I bought Philip Morris. However, this was aimed at increasing my dividend yield in this portfolio, and so that's what we did. We were able to identify this as a buy. Royal Dutch Shell right below it. Hopefully, oil looks like it's going to turn out 2019 as being the lowest performing sector. Obviously, if you owned oil this year, you were disappointed. It just did not perform well. I think the sector as a whole over the last 5 years is down 30%. So really tough go for oil, but hopefully we can get a little bit more outperformance out of Dutch Shell. We'll skip right over Right Smile and jump into Royal Bank of Canada. This is a great quality financial, nice high dividend payer, low price to earnings. on that. So nice to have some Canadian bank exposure there. UTX, one of my favorites. I've been in for multi-years. That's done quite well. We'll continue to monitor that, and there's some work to be done in this name, certainly. What I mean by that is adding to it. UTX is one of my favorites in this portfolio in the industrial sector. And then we have ExxonMobil here at the end, which again has been an underperformer. But at this point, I really care less about this number, and I care more about this share accumulation right now. Just being patient and allowing ExxonMobil to work for us, paying us the higher than average dividend in Exxon. And I actually think at this price right here, I think we're looking at an interesting potential entry point for ExxonMobil, but we're going to continue to hold the shares here. And then we've got the ETF section of the portfolio. We've got small cap value in VBR. We've got the real estate in here. We've got utilities. So a couple of the specialty ETFs off of the Vanguard's website here working. Emerging markets. And then the two complementary dividend yielders we're starting to gain a base position in. Nothing too crazy here either. My goal was to start a base in these, forecasting that these two products could end up being kind of the flagship flagship products within this account as I grow the base a lot bigger, as I'm looking to seek domestic dividend yield exposure and international high dividend yield, or VYM and VYMI respectively, in this. So with that said, guys, I'm going to kick you into the brief real quick and allow you to watch that and get the summary of what Merrill provides to me as one of many products that they have for me. All right, so this is the portfolio briefing. This is kind of a cool tool. I wish they would do this since inception, but I'm going to turn this music off. You don't need to listen to the elevator music. I'll kind of talk you guys through this, things I key off on. But this is kind of a cool way of viewing your portfolio as they work through and let you know how you've done for the year. So this is a year-to-date performance. So it goes back into December of last year. I don't know if that actually accounts for some of the downturn last year, but this is a screen right here that I typically take advantage of the pause button, and I'll jump in here and I'll select the benchmark, the 500 total return index, select that, and it'll throw that up on the screen. So I'll show you there. Mine's the top line, and then the S&P 500 total return is below that with the purple line. So I can just have a benchmark to compare it to. So that's kind of cool. I usually stop on this screen and interact a little bit, and then allow that to go ahead and roll through asset allocation. Basically, this is something that I've made as a strategic goal. There's no real reason to carry a lot of dry powder in this. I'll stop it for a second. But this is where we are. Equities, highly weighted to equities. The fixed income is in the other areas of the portfolio. So we'll allow that to play. So not a whole lot of good to have dry powder on the side of the Roth IRA. So as I mentioned, Apple Computers is being the outperformer this year, so nothing really surprising there. So it's an easy stock to own, one of the stocks that I feel like we can own forever. And then I'll finalize this. This is the dividend payouts for this year. Pretty anemic, 1.2%. When we combine, here's the ratings changes. But as we start to look at the portfolio comprehensively, you'll see that dividend payment increases to about 2.6% when you look at the portfolio as a whole. So with that said, guys, I hope you enjoyed this little snapshot. I'll kick you back to YouTube now. Thank you. All right, guys, we've come back out of the self-directed Roth IRA account number 1. I typically hesitate to roll these videos out. I don't want them to be misconstrued as something that's braggadocious in nature. I don't want people to look at it and say, what value is this for me? in an industry that seemingly will have you believe that you have to seek out representation in the market, would rather keep you in the dark on the truth. The truth is what you just saw. What is possible in the investing world? How can somebody on a normal salary achieve riches beyond what they're predestined to achieve? I hope to strike up a dialogue with regard to what is possible, not just for me. I know what's possible for me. All I'm trying to do is share that message with you guys and have you ask the question, can I do this too? I'll tell you that you absolutely can. Guys, if you're new to the message, please hit the subscribe button, share the message with people who will come onto the channel and actually appreciate the message that I'm putting through. Again, I stress, I do not have to do this, okay? I know where I'm headed in my financial life. I'm just looking to share this with folks, and I know there's thousands of people out there who have been empowered by the message, and that's exactly what we're aiming to do. Guys, thank you so much for tuning into the message, and good luck in your investment future.